For a long time, the unwritten rule of consumer tech hardware was, well, pretty simple. You just try to put your product in as many hands as humanly possible.
Right, the absolute sheer volume approach.
Exactly. You fight for every inch of shelf space at those big box retailers. You slash your prices to beat out all the generic brands, and you basically just rely on massive volume to drive your bottom line.
And, I mean, for decades, that model really worked.
It did.
But it's also a model that leaves you incredibly exposed when, the macroeconomic winds shift and everyday consumer spending just dries up.
Yeah, it's a grueling game of market share. But imagine if one of the biggest, most entrenched players in that volume game suddenly just hit the brakes.
Which is pretty rare to see.
Right. They look at the millions of everyday consumers buying their cheap, reliable tech, and they basically just say, no thanks, we're going in a completely different direction.
That is a bet the company kind of pivot.
It really is, and it's exactly the radical transformation we are exploring today. So welcome to this deep dive. Today, we're unpacking a really specific and honestly fascinating analysis that you brought to us.
Which is a good one.
It's a March 30, 2026 YouTube transcript from a creator called Mr. Stockfather, and it dives deep into Sandisk's stock, which trades under the ticker SNDK.
Right. And it's a compelling piece of analysis because it managed to catch a legacy tech giant right in the middle of this incredibly aggressive identity evolution.
Exactly. So our mission today for you, the listener, is to unpack Sandisk's massive pivot toward the artificial intelligence revolution.
Because it touches everything.
It really does. We're going to explore how they are fundamentally changing what they manufacture, who they are selling it to, and why this actually matters for the broader tech and investment landscape.
Yeah, because, Sandisk isn't just the company making those little USB flash drives that are probably rolling around in the bottom of your backpack right now.
Not even close anymore. They are rapidly shifting their weight toward enterprise solid-state drives, SSDs, and really high-end data center storage engineered specifically to support intense AI workloads.
It's a whole different ballgame.
It is.
Yeah.
Okay, let's unpack this. Why is this shift to enterprise AI storage such a massive deal for their profitability? I mean, I understand AI is the hot sector right now, obviously, but abandoning a massive everyday consumer market just seems incredibly drastic.
It does seem drastic, but to really grasp the why here, we have to look under the hood of what an artificial intelligence workload actually does to hardware.
Okay, lay it out for us.
So when you or I save a document or, download a movie, that's a relatively light task for a storage drive. It's quick, it's sporadic.
Right, it's not working very hard.
Exactly. But training a large language model or running generative AI, that requires ingesting and processing petabytes of data continually at just blistering speeds.
So it's not just about having enough space to hold the data. It's about the sheer physical punishment the drive actually takes.
Yes. The wear and tear is immense. Standard consumer drives, they just aren't built for constant 247 read and write cycles at that intensity.
It just break.
Oh, they would physically burn out in a matter of weeks.
Wow.
Yeah. So you need highly specialized, enterprise-grade solid-state drives that are essentially over-engineered for extreme endurance and minimal latency.
And I'm guessing those aren't cheap?
Not at all. Because these drives are the literal bedrock of a multi-million-dollar AI server rack, they command incredibly strong pricing. The profit margins on these specialized enterprise drives completely dwarf what you can make selling standard flash drives to everyday consumers.
Which brings us to the data. Looking at the breakdown from Mr. Stockfather's analysis, we actually have hard financial proof that this strategy is paying off in real time.
Right. It's not just theoretical anymore.
Exactly. During Sandisk's fiscal second quarter of 2026, they reported a sharp increase in data center-related revenue. But what really caught my eye wasn't just that revenue was up compared to last year. The analysis highlighted that this was a sequential increase.
And that distinction is everything in a fast-moving market.
Why is that?
Well, year-over-year numbers can be misleading.
Right.
They might just mean you had a terrible quarter 12 months ago, so anything looks like an improvement.
That makes sense. It's a low bar.
Exactly. But sequential growth, meaning this quarter was significantly better than the previous 3 months. That tells you that demand is actively accelerating right now.
So it's building momentum.
Yes. And management is projecting that this momentum will actually pick up even more speed in the second half of the fiscal year.
Okay, so the demand is clearly there. But that begs kind of a logistical or operational question. You don't just snap your fingers and magically generate pristine factory floor space to build these incredibly complex enterprise drives.
No, you definitely don't. And what's fascinating here is the concept of supply discipline.
Supply discipline.
Right. Sandisk isn't just taking on massive debt to build entirely new factories from scratch. Instead, they are actively redirecting their existing manufacturing capacity.
Oh, so they're cannibalizing their own lines.
Essentially, yes. They are looking at the production lines that used to pump out those lower-value consumer products, dialing them way back, and dedicating that precious capacity directly to these high-margin AI drives.
That's a bold move. It's like a massive auto manufacturer halting their popular, affordable sedan lines to retool the factory entirely for high-performance luxury sports cars.
That's a really good analogy, actually.
But I have to push back here a bit. Isn't abandoning your volume base inherently risky?
It definitely carries risk.
Right, because what happens if you price yourself out of the everyday market and then suddenly the big enterprise buyers hit pause?
Yeah.
You've effectively just given up your safety net.
It is a massive risk, and it requires, quite frankly, perfect timing. But you have to look at the macroeconomic environment Sandisk is operating in right now.
Which is?
The broader memory market is facing a severe supply-demand imbalance. The appetite for advanced AI storage is practically insatiable, and the global supply simply cannot keep up.
So there's a literal shortage of the high-end hardware.
Yes. And in a supply-constrained environment, your factory capacity is your most valuable limited resource.
Right.
If you can only produce a set number of drives per month, it is almost financial malpractice to use that capacity on low-margin products.
Oh, I see.
By exercising that supply discipline, SanDisk is protecting its profit margins while the market is red hot. They are choosing the highest possible return on every single silicon wafer they process.
Okay, that makes perfect sense. If you have limited silicon, you build the most expensive thing you possibly can.
Exactly.
But if they are moving away from the cheap stuff, let's dig into the actual technology they are deploying to capture this premium market. Because the analysis points out that this premiumization strategy is happening across the board.
Yeah, it's not just the enterprise side.
Right. They are even changing their approach to the consumer segment they do still serve.
They are. They aren't abandoning consumers entirely, but they are fundamentally changing the terms of engagement. They are moving away from competing purely on price and volume.
So no more race to the bottom.
Exactly. Instead, they're focusing on premium consumer products and highly differentiated designs. It's all about improving what the analysis calls the quality of revenue.
Got it. Selling fewer items, but making significantly more profit on every single transaction.
Precisely.
But the real engine of this whole strategy is the enterprise technology. The breakdown lists several specific advancements: the Optimus SSD lineup, new consumer-facing products like the Extreme Fit USB, and most importantly, the development of BICS8 memory.
Right. BICS8.
Now, BICS8 sounds like, just a random corporate acronym, but the underlying mechanics are wild. This is 3D NAND technology, right?
It is, yeah. And to understand why BICS8 is such a massive leap, you kind of have to think about how memory used to be built.
Okay.
For a long time, chip makers just tried to shrink the components to fit more memory onto a flat, two-dimensional chip. It was like urban sprawl. Eventually, you just run out of land.
So instead of building out, they started building up, like constructing a skyscraper instead of a sprawling suburb.
That's exactly it. 3D NAND physically stacks the memory cells vertically in hundreds of microscopic layers, and BICS8 is their latest, highly advanced architectural leap in doing exactly this.
So it's just much more dense.
Yes. It drastically increases the data density, meaning how much information you can cram into a tiny physical space, while also improving how fast you can actually access that data.
And paired with that density is the speed and precision of how the data is handled. The analysis highlighted a major catalyst on the horizon: the qualification of Sandisk's Gen 5 TLC storage solutions.
This is a huge piece of the puzzle.
Let's break that down, because TLC stands for triple level cell. Instead of just storing one bit of data per cell, basically a simple on or off switch TLC stores 3 bits,
Right.
which means the drive has to precisely read 8 different microscopic voltage levels in a single tiny cell.
It is a staggering feat of electrical engineering. I mean, truly. And when you combine that precision with PCIe Gen 5, which dictates the actual physical speed the data travels between the drive and the computer's processor, you have a product that is custom built for the brutal demands of an AI server.
But having the groundbreaking tech is only half the battle, right? You have to convince the tech giants to actually buy it.
Oh, absolutely.
And that brings us to the concept of qualification. When we say a drive is being qualified by a hyperscaler, we aren't just talking about like a quick test drive.
No, not at all. If we connect this to the bigger picture, these hyperscale operators, the absolute titans of cloud computing who are building these massive AI data centers, they do not take hardware lightly.
I can imagine.
Qualification means they take Sandisk's Gen 5 TLC drives and put them through months of agonizing, rigorous testing. They test for heat resistance, latency spikes, and failure rates under constant, brutal load.
Because if a drive fails in the middle of training a multi-billion-dollar AI model, the cost is just catastrophic.
Precisely. But here is the massive payoff. Once Sandisk passes that qualification, they're officially written into that hyperscaler's physical server architecture.
Oh, wow.
Yeah. And as the analysis points out, these cloud providers purchase over extended periods. Building out massive AI infrastructure takes years of phased rollouts.
So a qualification isn't just a one-off sale, it's a lock-in.
Exactly.
Once a hyperscaler designs their racks around your specific power and thermal profiles, it's incredibly expensive and painful for them to rip all that out and switch to a competitor halfway through the build.
Right, they don't want to do that.
So Sandisk is securing long-term demand visibility.
It turns a simple transactional relationship into a multi-year pipeline of high-margin revenue.
Now, on paper, this strategy is practically bulletproof. You build a highly complex premium product, you get it baked into the architecture of the biggest tech companies on Earth, and you ride the multi-year wave of AI infrastructure spending.
It sounds great on paper.
It does. But Sandisk does not operate in a vacuum. So if locking in a hyperscaler guarantees a multi-year pipeline of high-margin revenue, their competitors must be fighting tooth and nail for those exact same contracts.
Well, they definitely are.
Who else is in this race?
Well, this is where the narrative requires a serious reality check. The analysis is very clear that competition just cannot be ignored here. Sandisk is facing off against massive, entrenched heavyweights who are just as hungry for this AI revenue.
Two specific rivals are highlighted in the source, Western Digital and Micron Technology, and they are absolutely not sitting on the sideline.
No, they're swinging hard.
According to the deep dive, Western Digital is channeling massive resources into larger capacity drives and completely new recording technologies designed to push data density even higher than before.
Right, and Micron is running parallel to that, heavily emphasizing high-performance memory and advanced SSDs engineered specifically for these exact same data centers.
So what does this all mean? We've got SanDisk retooling for premium enterprise drives, Western Digital pushing new recording tech for the same market, Micron pushing high-performance memory for the same market.
Yep.
It sounds like everyone is trying to sell the exact same premium pickaxes to the AI gold miners. Does SanDisk actually have a unique moat here? Or is this just a massive traffic jam of tech giants trying to squeeze through the same door?
This raises an important question about their true competitive advantage. And the blunt truth outlined in the analysis is, well, no, Sandisk's strategy is not unique.
Oh, interesting.
The massive opportunity in AI is glaringly obvious to everyone in the sector. Because of that, the competitive environment is going to remain intensely fierce.
Which is incredibly dangerous in this specific industry. The analysis issues a really strong warning about the historical nature of the memory market.
Yes, it does.
It is notoriously, brutally cyclical. It's not a steady climb. It's a roller coaster of massive booms and devastating busts.
Ugh.
And I imagine that extreme volatility comes down to the physical mechanics of building the hardware. It takes years and billions of dollars to build a semiconductor or memory fabrication plant. You can't just scale up overnight.
You've hit on the exact mechanism that drives these boom and bust cycles. Let's say demand spikes like it has right now with AI. Prices skyrocket, margins are phenomenal, and everyone is basically printing money.
Right.
So Sandisk, Western Digital, and Micron all decide to reinvest those massive profits and build new state-of-the-art fabs to capture even more market share.
But building a fab requires securing massive tracts of land, pouring specialized concrete to eliminate microvibrations, and ordering extreme ultraviolet lithography machines that take years to deliver.
Exactly. It takes a long time. By the time those new factories finally come online and start pumping out millions of new drives, 2 or 3 years have passed.
And the market might have changed.
Exactly. What if the initial wave of AI infrastructure building has cooled down by then? Suddenly, you have three massive competitors all flooding the market with new supply at the exact same time demand is softening.
Oh, that's a disaster.
Prices crash, those fat margins evaporate instantly, and the boom turns into a severe bust.
So Sandisk's entire current strategy of abandoning volume for premium pricing is entirely reliant on this current state of high demand and constrained supply lasting long enough to make the pivot worthwhile.
Yes.
If the cycle turns, they are incredibly exposed.
Which transitions perfectly into how Wall Street is actually viewing this tightrope walk.
Yeah.
The stock market is essentially a machine that weighs future expectations, and right now it seems like the market is wildly optimistic about Sandisk.
The analysis notes that SNDK stock has already posted very strong gains this year, but more importantly, it's trading at a higher valuation multiple compared to the broader storage industry.
And when a stock trades at a premium valuation relative to its peers, it means investors are willing to pay more for every dollar of Sandisk's earnings than they are for Western Digital's or Micron's.
So they're betting on them specifically.
Right. They are actively pricing in superior future performance.
And the optimism goes all the way up to the institutional level. The analysis points out that Wall Street analysts have already aggressively raised their earnings estimates for Sandisk's fiscal 2026. Everyone is banking on this AI pivot working flawlessly.
Here's where it gets really interesting. When the stock has already surged, when the valuation is sitting at a premium, and when the professional analysts have already baked massive growth into their models, you have a classic priced for perfection scenario.
Priced for perfection. Right.
Right.
If everyone already expects Sandisk to successfully navigate this pivot, secure the hyperscaler contracts, and dodge the cyclical bullet, then the current stock price already reflects that flawless future.
Exactly.
Which means there is almost zero margin for error.
Zero. It leaves the company highly vulnerable to the slightest misstep. The analysis issues a stark reminder here. Nothing in these markets is guaranteed.
Right.
If there's a delay in rolling out BICS8 memory, or if a hyperscaler decides to qualify a Western Digital drive over a Sandisk drive, or if the broader industry supply catches up faster than expected, those lofty expectations can crumble in a matter of hours.
The downside risk is massive because all the good news is already reflected in the price. The only way the stock continues to succeed from here is if this transition to high-margin products not only continues but accelerates exactly as management promised without any macroeconomic interruptions.
It is an incredible high-wire act.
It really is. And they are trying to cross it while heavily armed competitors are walking right behind them.
Exactly.
Which brings us to the core takeaways for you, the listener. We have covered a massive amount of ground today, so let's pull all these threads together. At its core, Sandisk is executing one of the most aggressive strategic pivots in modern hardware.
Truly unprecedented in some ways.
Right. They saw the AI revolution coming and realized that fighting over pennies in the high-volume consumer flash drive market was basically a losing game. So they are utilizing strict supply discipline, redirecting their factory capacity to build advanced, highly complex tech like BICS8 memory and Gen 5 TLC drives.
And the early data validates the strategy. I mean, the sequential revenue growth in their data center segment during Q2 2026 proves they are actively capturing this high-margin AI demand right now.
But they are executing this maneuver in an incredibly hostile environment. Micron and Western Digital are aggressively pursuing the exact same enterprise contracts with their own advanced tech.
Yes, they are.
And they are all doing this within a memory market that is historically famous for vicious boom and bust cycles. Whether you are an investor trying to justify Sandisk's premium valuation, or just someone fascinated by the physical hardware that is quite literally powering the AI boom, Sandisk is the ultimate case study in how legacy companies must ruthlessly reinvent themselves to survive.
It's a masterclass in corporate agility.
Yeah.
But, if we look at the entire landscape we've discussed, it leaves us with one incredibly provocative thought to mull over.
Let's hear it.
We talked about how hyperscale operators purchase these specialized enterprise drives over extended periods, which provides Sandisk with that golden long-term demand visibility right now.
Exactly. Those multi-year phased rollouts of AI server racks.
But as we explored, the memory market is deeply, inescapably cyclical. Fabs take years to build and demand eventually cools. So consider this. What happens when these massive cloud providers actually finish building their foundational AI data centers over the next year or two?
Oh,
What happens when that extended period of aggressive infrastructure spending finally comes to an end?
That's a terrifying cliff.
It is. Suddenly, the entire storage industry, Sandisk, Western Digital, Micron, who have all abandoned their consumer volume safety nets, will find themselves fighting over an enterprise pie that is rapidly shrinking. Is this incredible AI hardware boom just setting the stage for the most devastating cyclical bubble the memory market has ever seen?
It is the ultimate billion-dollar question. When the VIP clients finally get full, you just have to hope you didn't throw away the recipe for the everyday burgers.